We're saving the best for last, maybe. We'll have to see. So my name is Erin Swenlin. I am the Vice President of DecisionPoint.com. And today I'm going to talk to you about under the hood indicators. So we do a couple of different things at Decision Point. We have market indicators. So we have a market letter that we do every day. And then I also do what's called Decision Point Diamonds, and that gives you actual stock picks. But it's all about teaching you how to fish. So here we go. We're going to start teaching you how to fish. And we have a lot of free opportunities for you as well to learn about us. So I'm going to be talking about, yes, my favorite indicators. And I'm going to start off with market indicators. For those who aren't familiar, a market indicator is something that gives you a pulse on the entire index or the entire market in general. So we're looking at things, well, I'll be showing them to you, but we're going to be looking at indicators that give you a sense of what's going on throughout the market, as well as in some of the areas like the sectors that I'm going to be showing you as well. So those really give you that pulse on what's going on overall. And then I'm going to be talking to you about my relative strength analysis. I'm going to get into timing my entries and exits. We have our price momentum oscillator. This is our indicator that we came up with. It's very similar to the MACD and the PPO, but we like ours better, and you'll see why. I'm also going to talk to you about my other favorite indicator. It's a very simple one. It's on balance volume. It doesn't take too much to understand, so I'll be able to explain that to you, as well as the relative strength index. And I suspect that in this, all these sessions, that a lot of these indicators, except for the PMO, probably have come up, but I really think that they, there are a lot of intricacies to them that maybe you don't realize. So we'll talk a little bit about that. And then I do relative strength analysis, and I'll discuss that. And I do that for stocks. So really the PMO, all of these down here are going to be the stock indicators, if you will. They're going to tell you about the specific stock you're getting ready to look at or enter. And then I'm going to talk about how you can time your entries and exits using just these three indicators. And you'll find that you have a lot of success by using this very simplified, system. And so I'll explain to you how I do that with my PMO and the RSI on timing entries and exits. So let's get right into it and talk about the market indicators. This is one that is just ours, and it's called the Golden and Silver Cross Indexes. I'm going to show you an example of these, but just to give you a quick overview, I think most people are familiar with what a golden cross is, right? That's the 50-day EMA or simple moving average moving above the 200-day moving average. And so what we've done with the Golden Cross Index is that we look within an index and see how many of those stocks are on golden crosses that have their 50-day above their 200-day. It gives us an excellent viewpoint of participation in what's going on in the market right now. The Silver Cross Index is very similar. We call a silver cross a 20-day moving average positive crossover the 50-day moving average. And so we tally up how many stocks within that index have their 20-day EMA, or well, we use EMAs, above their 50-day EMA. And so again, you can see that more intermediate term participation. Additionally, this is really the excellent piece that gives us bias, is what I call it, bearish, bullish bias. And that is looking at the stocks within an index that have their price above their 20, their 50, and 200-day EMAs. Again, that gives you a really good sense of participation within an index, and participation, as you'll see, is very important. We also have what we call climax indicators, and these are indicators that we're finding to be extraordinarily successful. We've had a lot of these climax days, and I'll get into that a little bit later, but we have these climax days. And we're finding that when you get these climaxes on the indicators that we use for that, that you get a pretty close idea, and almost always I have to go back and back test this because we've only really started to do this, on a daily basis, really started to explore this particular concept of climaxes within the market. But we find that when you get these market climaxes and you identify them as either exhaustions or initiations, it will give you an idea of what's going to happen over the next day or two. And it's really fascinating. I can't wait to show you those charts. Then we have our Swenlin trading oscillators, which I'll talk about, and our intermediate term breadth and volume oscillators. So I'll talk to you about those. I will tell you that all of these indicators that I will talk about are available on stockcharts.com. And in fact, if you're an extra member over there, you can get our free chart pack, which includes a lot of these charts you're going to see. But to get the annotations, to get it set up exactly how I'm going to show you, you do have to be a subscriber. But these indicators are not, magical in that you can't get them anywhere else. You can find them on stock charts. So I just talked about a golden cross and silver cross index. So golden cross, 50 above the 200, silver cross, 20 above the 50. And then we tally those components, and that's what gives us those silver cross indicators. So let's look at one of those charts for the golden and silver cross indicators. So we have the SPY here on top, the price movement. And this is as of July 20th. So these charts are going to be about 2 days old, which I think actually might work to our benefit here. We'll see. So what we do, again, here is that silver cross index. Here is the, let me go back, the golden cross index. And then I always include the bullish percent index, the BPI. A lot of people are familiar about this one, but it tallies up how many stocks in the S&P 500 have a point and figure buy signal. I don't do point and figure, but I do like this because it's a similar indicator to the silver cross and the golden cross, and it's a little bit more jumpy, so it's a little more short term than this intermediate term one and the more long term golden cross index. But as you can see, when we look at what's going on in the market, these indicators give us a really good sense of the participation, but they also show us these negative divergences a lot of times, and they come right before these declines. So you can see negative divergence here, and then the decline, negative divergence, and then decline. And so right now, at least on July 20th, we had only about 57% of the S&P 500 had stocks with their 20-day EMA above their 50-day EMA. If you're going to continue a bull market rally, you need to have more stocks that are participating than 57%. Now you'll see that the golden cross is very elevated. It's overbought, and it hasn't moved very much. It is declining. It started to climb again, but I can tell you, just knowing what's happened the last 2 days, it did decline somewhat to 95.2, which again is rather interesting, right? After you have a big move to the upside. So the reason this number is also very high is you can just look at the SPY and see how high above the 200-day EMA that 50-day EMA is. And so it will take a long time for this number to fall down, as long as we have all these stocks that came out of the bear market low with 50-day EMAs well above their 200-day EMAs. But that is where participation comes in with the market bias. And that's where I was talking about looking at the stocks with their price above their 20 and 50-day, 200-day EMAs. And what I do is I compare those numbers to what the golden cross and silver cross index numbers are. So you can keep in your mind that we had 57% on silver crosses after trading on the 20th. So I'll compare that. And if that participation number is lower, so if you have fewer stocks with their price above their 50-day EMA, then that means you're going to lose those silver crosses, because with EMAs, as long as the price is below that moving average, the moving average is going to tend toward where price currently is. So it tells us that there's a bearish bias because, if you have a lot of stocks with a silver cross, and then you have only, of those a much lower number than the silver cross, then that participation, the bias is bearish because the chances are you're going to start losing those silver crosses. And then again, if participation is higher than what those golden and silver cross numbers are, then you have a bullish bias. So here is our participation chart, and we can make a comparison on this. So we know that we had a huge up day on the 20th, and look at what participation was doing. So remember I was talking about 57% have a 20-day EMA over their 50-day EMA. 57% silver cross index, silver cross index number. My dogs are really excited because I got a package. So they get more excited than I do. So in this case, we only have, of those 57% of stocks, we only have 38% of them with their price above their 50-day EMA. That means that they're going to lose those silver crosses. So you have a giant up day, 1.6% up day, and you see a decline in participation. You see fewer stocks with their price above their 20-day EMA. That's a pretty serious negative divergence. And that tells you that there's something going on under the surface and it's not good. So we have to be prepared then for this bounce that we're getting right now to likely peter out and go away. And you can see also we only have 80% with their price above their 200-day EMA. That means of those 95%, 15% of them are going to lose their golden crosses if they stay below their 200-day EMA for too long. So combining the silver and golden crosses with the participation of stocks above their 20, 50, and 200-day EMAs is a really excellent way to determine the bias in the market. So based on just the last chart we looked at, the golden and silver crosses, comparing the participation, and these numbers are lower, that tells you that despite a 1.6% gain yesterday, we had a bearish bias. So that tells us to be on the lookout and expect, my thought is most likely we're going to see a breakdown coming in a big way. So now I'm going to talk about those climax indicators. This has been absolutely, like I said, stunning in terms of calling exhaustions and initiations. And it's really one of the pieces that are getting more and more subscribers coming to us because they are seeing the effectiveness and how it really does help you look at what's going on in the market as far as these impulses, if you will, these climaxes. And really, it's a very simple as far as the indicators we use to do this. And again, these are most likely going to be on your whatever charting platform you're using. But like I said, we're on stock charts. So some of our indicators like the PMO are, and the Swenlin trading oscillators are pretty much only on stock charts for that. So I look at new highs, new lows. I look at the net advances and declines, net advances, decline volume, of course, the volatility index, which a lot of people use as well. And then I throw in total volume, but the key piece are volume ratios, and not too many people study this. And when you combine all of these and you get climactic readings on 1, 2, 3, 4 of them, you can now look and make a determination as to whether the current move is exhausted or it is an initiation. It's getting ready to do more of the direction that you got that climax in. So let's just look at these climax indicators. So this, again, this was as of July 20th, but the indicators on the chart are from July 19th. So what happened, right, is we got the big decline. We hit the 50-day EMA, and we got these high net AD readings to the negative side. You had lots and lots of advancers, decliners, more so decliners. and the volume as well. They hit outside of our climactic area, if you will. And then notice that we had really high total volume as well on the 19th. So when we put all of these together with also our volume ratios, look at what the up down or the down up volume did on the 19th. It was exceedingly high. You can see the same thing on the S&P, the same thing. So what we did is we looked at all of those climactic readings. In this case, we had already been in a downtrend. And so with these climactic readings, or a climax day to the downside, that was actually an exhaustion, a selling exhaustion. And so what it told us was to expect higher prices over the next day or two. Well, as you can see, when I printed the chart, we were getting exactly that. We were starting to see that huge move to the upside that happened yesterday. Or I should say, yes, yesterday. The Swenlin trading oscillators, this is the other piece that I really love as far as our market indicators. And again, you can see that climactic move on these indicators in conjunction with what we saw on that previous chart. You can also see the damage that was done on these. Notice that only 15% of the S&P 500 had rising momentum. So again, that tells you that there's some issue there, but it's also a very oversold reading. So again, combining all of those climactic readings, it told us to expect the big rise that we got on yesterday's close. The other one I use is our intermediate term breadth oscillator and volume oscillator. And these give you that intermediate term look, obviously, they're IT. And so we look again at these for these negative divergences, because you'll see that nearly all the time when we get these, that precedes a decline. So that's something we were watching. You can see that crossover buy signals, and I'll talk a little bit more about the PMO shortly. But you can see that had dropped significantly as well on that big decline that we had on July 19th. So all of these told us that, as nervous and as crazy as that day was, that sell-off day was, we knew ahead of time, well, not ahead of time, we knew ahead of the open on the 20th yesterday that we would see higher prices. And sure enough, of course, we all know we did. So now I'm going to really get into those under the hood indicators. I've explained to you some of those basic indicators, and I'm going to now apply them to our sector analysis. And this is what I call looking under the hood on the sectors. And again, these charts are available. I'm going to move over to my live example. That's my little reminder to do so. And so we're going to look at these charts. Now, like I said, the indicators themselves are available on stock charts. And if you do go to manage, go to your account if you're with them, and you go to manage chart packs, you're going to see all of these are free chart packs that you can download. So while they don't have exactly the charts that I'm going to show you, because those are members only, it does give you a pretty good head start on what to do. So I'm going to just jump right on in here. Let's go to our chart lists and my S&P sectors. All right, so just for a summary today, we know that, let's do this direction. Energy really made a comeback today. We know that utilities, which had been on the rise, as well as real estate and staples, all of these defensive sectors kind of took it on the chin today, but not that much. So we're still seeing a lot of participation in these sectors, but I'm going to show you that. So let's just get started here with our first one. All right. So this is XLE, the energy sector. And you can see, again, here's all of our under the hood indicators, right? So we have our PMO. And again, this is like your MACD or your PPO. It's your momentum, your look at what kind of momentum is going on. So we already knew, we had the decline coming here. We knew we had this bearish rising wedge. We knew that there were problems under the surface here for XLE, because you could already see at that point The participation as far as volume, the OBV was moving lower. Just a quick side note here, the unbalanced volume line is really easy, especially for beginners to understand. I use it because I learned it back in high school, actually junior high. I was helping my dad, Carl Swenlin, who is the founder of Decision Point. I was helping him calculate it with a pencil, paper, ruler, and the Barron's section, you know, so you could go down and I'd write the volume in, I'd use a calculator and we would calculate it. And it's easy to calculate it because all you do is that if you have an up day, you add that volume to your on-balance volume line. If you have a down day, you subtract all of that volume for the day in there. So it gives you a really nice tracking of how volume patterns are going without, you know, trying to read it into just looking at your volume bars. So that's one of the hood, under the hood indicators, if you will, but that is one that I'm going to show you how I use that with my stock trading as well. So under the hood here, we're looking at the Silver Cross Index, but this is only for the members of XLE. So we know, and again, this was on July 20th when I put these together. So this was yesterday, mid-morning. So we didn't have all of these numbers updated, but at the time. But what you can see is how we had this support level holding. We were starting to see a little bit of downside. We got the breakdown here, but we were already seeing the volume patterns turning down. And look at how participation, that silver cross, was starting to deteriorate. And then of course, as we headed, even when we were heading up back here, silver cross was still going down. You still knew that there was a problem under the surface. BPI, very low numbers. And you can see right now, and I know if I looked at this chart now, the numbers would be maybe slightly different. Well, actually, no, we're looking at today's chart. What am I saying? But right now in XLE, there are no stocks, none, with their price above their 20 and their 50-day EMA. That's about as oversold as you can get, right? So that's good news. But it tells you that there are certainly issues and a lot of work that has to be done by the stocks that are in XLE to start moving this sector higher. And even with today's what kind of move, we had almost a 3.5% gain today. And even with that, it did not heal these 0% numbers on price above the 20 and 50. And then you have that golden cross. And again, you're going to see a lot of elevated readings on the golden cross because again, when you have a bull market move the way we've had, even, you know, pretty much throughout the sectors, that 50-day EMA is just so far above the 200-day, it will really take some time for those signals to start falling. So under the hood, I know right now, even with this really nice rebound off of that 200-day EMA, which is a perfect rebound spot. And it also coordinates pretty well with these lows back here. It looks pretty good. But the problem is we don't have participation under the surface to carry it much higher. So that gives me that sense of participation that, okay, we're seeing this rebound, but it's probably not a good time to pile in here just because we got the rebound off of that 200-day moving average. We need to wait and see that the stocks start to percolate and we start seeing that participation increase. You can also see we use the relative strength line, which is comparing XLE to the S&P. And like I said, I do relative strength studies. You're going to see those on my charts for individual stocks. But you can see that that is starting to turn up. Well, of course, it's doing a bit better than the S&P. We know it's had this huge move to the upside on this bounce. So let's look at a few others. So one of the ones that, of course, everybody is interested in knowing about, of course, is technology. This sector is clearly one that carries the market. It has the really big mega cap names in it. And so we really want to keep a pulse on participation as far as technology goes. It doesn't look too bad right now. I would just be concerned that we're probably going to see a move to the downside here and we'll have a little head and shoulders action going on. And that would tell us to expect some more downside. What else could tell us to expect maybe some more downside ahead? Our PMO is on a negative crossover sell signal. We did get the OBV rising, but you can see it really didn't overcome all of the selling volume we had on that decline, which is another problem. You can see that participation, silver cross, okay, so we have about 70%, but it is below its signal line. It dropped there, it's continuing to drop. And participation, it looks like today did bump to the upside, so that's a good sign. We have how many above their 50? 72, 73%. So of the 70% that we have with silver crosses, we know that that actually could improve because we have a higher percentage with price above their 50-day EMA. And then when we look also at that golden cross, again, like I said, it's very high, but we are seeing that trending lower. And that tells us that we have a negative divergence going on. So there's still some problems here when we look under the hood on the foundation that the technology stocks are sitting on. We're not getting quite the participation that we want to see there. Utilities, this has been one of the winners, and it pulled back quite a bit today and really has been since that top and that breakout. Things were looking great for utilities. It had that beautiful breakout. You could see volume was coming in. You could see that that silver cross had started to improve and participation was quite high, but it was high into the overbought area. So it shouldn't be too much of a surprise that we saw a decline there. I would just say that, if the market's moving up, we're having, we've had two great up days. Generally, that's not going to be carried on the back of your defensive sectors. So relative strength, you can see, really plummeted this week. And we're also seeing a deterioration in participation here as well. So that's something we have to keep in mind under the hood. Also, we have that PMO topping here. So I was really looking for utility stocks to do well this week, but we had rather overbought readings here coming in to this week. And so seeing the decline, shouldn't have surprised me that much. XLRE, we know, has been really outperforming. And you can see that now momentum is starting to get a little bit shady here. It's a little shaky. It's moving sideways. We have an OBV that's got declining tops, and we're getting some declining tops here as well. So XLRE is still showing a lot of strength, but seeing the fact that we're losing participation as far as stocks with their 20-day EMA above their 50 is a concern. And you can see that we're also losing that on the BPI. So, despite getting some of those nice moves that we had going in as far as real estate is concerned, we're still seeing some pretty good participation. It's not really that overbought. And although relative strength pulled back a little bit this week, again, not a surprise, we still have 100% of the stocks in XLRE with golden crosses with their 50 above their 200. So that does tell you that there is still a lot of strength under the surface. I would just be a little concerned seeing this participation, these numbers falling lower on the silver cross and the bullish percent index. Let's go ahead and look at staples. All right, so staples have been on a pretty nice run since about mid-June. We had that bottom. And then we started to see the move up there. We had a confirmation of the OBV. We had rising bottoms to confirm that. We were still seeing a little bit of issue here with the silver cross, but as we continued higher and bounced off that 50-day EMA, that's when you started to see the change in participation to the upside. Right now, I have a little bit of concerns just because the participation has dropped so much with stocks above their 20 and 50 that it does give me a little pause right now when I'm thinking of those defensive sectors. But it gives me pause when we look at all of these charts and we see deterioration in participation, because that tells me that, if there's no real leadership, the markets is going to flounder. The other one of interest would be consumer discretionary. because we're starting to see a rebound here in consumer discretionary. But I still have a PMO crossover sell signal. We still have pretty paltry numbers as far as participation goes. And again, we're seeing that silver cross on the decline. We're getting a little bit of a tip here to the upside on the big move we had today, but I'm going to show you something at the end of this to maybe give you pause. Financials is a really interesting chart. I'm seeing a lot of strength coming through my scans for financials, particularly banks, but I've hesitated really to get too involved because we still have this declining trend. You could see flat bottom, declining tops. That's a descending triangle, and that is bearish. So if we see a turn now, if it cannot get above its declining trend, I would be looking for the financials to turn right back down. We have, neutral participation, not a lot, it's pretty much half of the sector is doing well and the other half isn't. And that silver cross has continued to move lower. So we're now in oversold readings here. So if we do get that breakout, that would give me a lot more confidence in what's going on those financials. So again, all of these indicators are available on stock charts. So, and I think some of these might even be available on some of the other charting platforms as well. Let's see, XLC, we haven't covered that one. You can see the rising wedge, which is bearish, suggests a breakdown ahead. We have momentum on the decline despite this bounce. And again, the participation numbers, they are starting to improve. And seeing the silver cross flatten out here for the communication sector is encouraging. But you can see relative strength is just, it's just not been the best sector to be in. All right. Looked at those. Let's take a peek under the hood at healthcare. So healthcare is trying to get to those new all-time highs. It's having some trouble. You can see that the momentum shifted lower. It looks like it's flattening out. We might see a turn there on momentum. We can see some volume coming in, but not enough to get rid of these declining tops. And look at this. We're starting to see in the healthcare sector a bit more participation. That silver cross has actually made a positive crossover of that signal line. The BPI, it's doing okay. It does look like it might want to improve here. And I do like seeing this improvement under the hood, if you will, on participation with the stocks above their 20-day EMA and their 50-day EMA. But there's still a slight bearish bias because we have an 82, 83% silver cross, but we have only 79% with their price above their 50-day EMA. So there's still about 5%, 3 or 4% in there that could lose their silver cross, which would bring this indicator lower. But at this point, it's looking kind of encouraging here for some of the healthcare. And again, relative performance this week, you can see it's not performed as well as the S&P, mainly because it hasn't moved to the upside as quickly. All right, industrials and materials. Industrials are in a declining trend, but we did see today a nice pop to the upside. We've got a positive RSI now. The RSI, in simple terms, tells you which half of the prior 2-week trading range price currently is in. So when it's negative, that means it's trading in the lower half of its price range for the previous 2 weeks. And if it's above that 50 level, then that means it's been in the upper half of its price range. So you can see really over the past month, industrials have been kind of in a go nowhere place. They've really stayed within their price range from the past 2 weeks. You can see that consolidation. And then of course we lost that gap down, was really painful for XLI, but we're now starting to see a possible breakout here. I would be suspect of it just because of the flat bottom again, declining tops, and that's a descending triangle, which is bearish. But look at the increase in participation over the past 2 days on that big move to the upside. We're seeing volume coming in, Still a negative divergence there though, still seeing declining tops there, but still a big improvement. This is what really entices me here with industrials right now, is the fact that we're seeing a lot more stocks with their price above their 20 and their 50-day EMAs. And notice this number, 63%, is higher than that 60% on that silver cross. So now I know I have a bullish bias going on in the industrials. And you can see also that relative strength is picking up against the S&P. And then you had more stocks within that sector move to move their 50 above their 200, had golden crosses. So you can see we're very overbought with that reading, but certainly encouraging to see the longer term foundation of these stocks improving. And the materials will be, I believe, my last one here. And again, all of these charts are on our website for our subscribers. You can get these indicators, like I said, but you won't see them all, the chart's all fixed up for you with the annotations. We annotate these every day to keep you informed. And so those chart lists are available to our members. So what we're seeing with XLB, I've noticed that we're seeing some improvement under the surface, but then we lost ground here. For example, gold miners were starting to show some positive signs of life with their participation, but started to never really picked up enough. And then of course we got that big gap down here on XLB. And when we look again at the underneath, we can see momentum is trying to shift to the upside here, but the silver cross is still firmly in a decline here. And, the BPI is kind of ticked up here. The participation is, 21, 25% of those stocks with a 20 price above their 20 and 50 is still a little bit low. And I don't see really a trend yet going on here. And again, when you compare it to the S&P, what is the relative strength? You can see that it's still in a declining trend. So I'm not so certain that this would be an area to be looking for your stocks at this point. All right, so let me go back to my PowerPoint and we'll move along. All right, so now we're going to get down to the meat that I think a lot of you are here for, which is trading. How do I trade? How do I get the best timing on my entries and exits? What do I look for? I am one who is a big believer in keeping it simple. And it is what I'm going to show you is pretty simple. And again, most of these indicators, except for the PMO, are available on most charting platforms. I personally don't think you have to make it too complicated. I feel like if I add too many different indicators in there, there's just more to try and put together and, analyze, and one is going to say something, the other's not going to say something. It's just this, by keeping it simple and only having a few, I think you're in business. So the RSI, which you did see on those sector charts, I still am a big believer of. It tells you whether price is overbought or oversold. And, you'll see on any of your charts that when price gets overbought in that top of that range or exceeds it, that typically that stock is ready to top and will pull back. So that's important. Our price momentum oscillator, like I said, I have to have that on my daily chart. On balance volume, I explain that very simple concept, gives me volume trends very quickly. I can process that quickly in my mind as to what that means and what's going on. I use the stock charts technical rank as well. That gives me internal and relative strength. I'll explain that a little bit more when we get to the daily chart. And then I use relative strength analysis. And you saw that a little bit on those sector charts where I compared the sector to the S&P. I do something similar on my charts for individual stocks. So the key for timing the entries, I use a daily chart, 1 year chart, OHLC bars. But when it comes to timing my entries, I'm looking for a 5-minute candlestick chart. Now, I generally don't look at a 5-minute candle for my, determination if I want a stock or not. It's just that time frame is just too short for me. But I find that I want that really short time frame in order to time my entries. So I use a 5-minute candlestick chart for that. I have a couple of different ways that you can enter. I have a conservative entry, and that's going to be a positive PMO crossover with a positive RSI, a 5-minute period PMO and RSI. And then it's nuanced. You can go for more aggressive entries where you get that PMO, the momentum is shifted, it's moving upward, the RSI is rising. I call it an aggressive entry because the tables can be turned very quickly. But usually once you have that crossover and that positive RSI, generally you're going to see price continue higher. Timing the exits is actually pretty easy because if I want to get out of a stock, I'm just looking for anything that is negative. So to me, if the PMO momentum is shifting downward with or without whatever the RSI is doing, I really don't care. If momentum is shifted downward, it's time to get out that day. That's when I time my exit. And again, I'm going to show you some examples. It's pretty powerful. So let's do that. All right, so let's go ahead. I did some scans today, and I'm going to share a couple of the stocks that I gave to my Decision Point Diamond subscribers. Basically, I do 10 stock picks per week. It's not a model portfolio. It's really teaching you how to read a chart, find the characteristics that will give you that strong stock pick. I give you the picks because obviously I'm showing you a chart that's strong and why I like it. But it's really, once we do the week, I do a recap on Friday. And after that, we just clean the slate. I move on. We do more stock picks the following week. So I discuss trends that I'm seeing based on my scans. For example, today, I started to see some movement in the home construction industry group. I had 2 of those home builders come up in my scans. And so I pulled up the daily charts and I really liked them. Why did I like them? Well, there's a couple of things going on here. And again, here's your RSI. So I saw the RSI moving positive, going above that 50-day, the neutral line, if you will, the net neutral. So it's now starting to trade in the top of its 2-week trading range. So that's a good thing. I have my PMO giving me that positive crossover buy signal. I have a chart pattern that is a falling wedge, which is a bullish chart pattern. I have lower bottoms on price, but I have about even bottoms here on the unbalanced volume. It's not a true positive divergence, if you will, because you would want to see rising bottoms on your OBV to give you that positive divergence, but it does tell you that there is a bullish bias as far as volume goes because we're not seeing declining bottoms on that OBV. So that's a positive. And then I look at this stock charts technical rank. Basically what they do is they have a formula, and you can get the scooter on any of your charts. Even if you are a free member, you can get that indicator. So what it does is they have a calculation that is weighted toward the long-term and intermediate term, with about 20% of that calculation being short-term. A lot of you probably are familiar with John Murphy, and he is the one who came up with that formula. So what they do is you have the formula for that stock, and then it compares the result of the formula to all of the stocks within its universe. And in the case of DR Horton, it is a large cap stock. So among all the large cap stocks that they calculate a scooter for, it's at 68.2%. So I like to find stocks where it's in what I call the hot zone. I like to find that scooter that is above 75. That tells me that it is in the upper quartile of its universe, be it small caps, ETFs, large caps, as in this case. And then this is a really important piece. I knew about this Years ago, working with my friend Tom Bowley, we used to do a show on stock charts called Market Watchers Live. Absolutely adored it and adore him. But one of the things he used to do was make a comparison on his stocks of the industry group that it's in compared to the S&P, to the stock itself compared to the S&P, and then finally he compared the stock to the industry group. And so by doing that, you can find leadership. So first of all, we know home builders, when we look at this, are starting to see relative strength. We can see that DR Horton against the S&P is outperforming. We can now also see that if I'm gonna get a home builder, that DHI is the one to get because it is outperforming its industry group. So that is my relative strength piece. And again, not overly complicated. That is pretty easy to add onto your charts. Basically, I have kind of this general parameter that is on my default, and you can set it up so that it compares industry to S&P symbol, et cetera. Again, you should be able to find that on stock charts, or if you click on any of my charts in my blogs, it'll bring you to the chart and you can take a peek at how I set that up. But it's great. So every time I pull up a chart, I get this relative strength analysis. I know under the hood what's going on as far as this stock. So I like DHI because we did have that really forceful move to the upside. We haven't actually had the breakout from the declining trend, so that could be a bit of an issue. Now, whenever I do diamonds, I always put a stop level in. It's very important to me to cover your derriere and my own. I really think that whenever you buy into a stock, you should have at least a mental stop. But I think to really fully protect yourself, especially in a market that is acting up, trying to turn back down, we're not really sure what, the bias is pretty negative right now. And we're seeing that participation piece really not looking good. So I think it's important to actually set them. I also tell people that if you're on a runner, as I call it, those stocks that move straight up, even back here, that's when I use a trailing stop. It basically, your stop follows you all the way up. So you're protected if all of a sudden the bottom falls out. You'll at least be able to preserve that and not have to wait until your hard stop gets set on the big decline. So anyway, I like DR Horton. So now what do I do if I wanted to trade it tomorrow? And that's what we want to do, right, is to talk about the trading piece. Here is my 5-minute candlestick chart right over here. Let me get this fitting in there just right so we can see everything we want to see. Okay. And that will work right there. All right. So this is where the timing piece comes in. And again, I use the RSI. It's a 5-minute chart, so it's a 14-period, 5-minute period RSI. PMO, same thing. It's a 5-minute period PMO. That's why it looks different from what's over here. And then I have on balance volume, which just gives me an idea of the trend. What's the interest level? We're seeing a big move to the upside, but is volume following that? Is it, you want price to follow volume, and if it doesn't, that's where you have a problem. So honestly, seeing a big sell here, selling volume at the end of the day, well, it does give me some pause, I have to say, about the pick, but we're talking about timing it. So the buy points, as I was saying, and I'm going to put my little inspect tool on here so you can really see, the buy points come when you get that PMO positive crossover and a positive RSI. So in this case, the buy point technically came in right here. The RSI was overbought. So I have to say, and I talk to people in my trading rooms, that if the RSI is overbought, you are taking a bit of a risk. It becomes a more aggressive entry just because, when price gets overbought, that's typically when you're going to see the decline. And sure enough, the RSI was overbought, and so price had to come back down. So that was a buy point, but one that, like I said, I wouldn't have done myself because the RSI was getting overbought. So where's the next buy point? PMO crossed over here, RSI is positive. So our buy point came in today at 12:30 at about $90. And you can see that it did, the PMO was showing you the momentum was good. It was getting overbought, but in a bull move, a lot of times you're going to see overbought conditions persist. But like I said, I don't want to count on that getting in. So that's why that wouldn't have been a very good buy point. So the buy point, the conservative buy point came in here. Now, if you wanted to be a little more aggressive with your entries on the PMO and RSI, here's where the PMO began to turn and the RSI had just gotten positive. So you could have actually jumped in a bit earlier and ended up at a price point that was a little bit lower than that $90. Now, sell points, like I said, you're looking for anything negative on the chart. As soon as that PMO starts to turn down, give you a negative crossover, in this case, overbought RSI, that was telling you, okay, this is a good time to sell and lock in your profit. So the next buy point we're going to be watching tomorrow is going to be whether this PMO actually does give us that crossover, because the RSI is positive, so that's great. So our buy point should come in early tomorrow if this stock is going to continue to the upside. I believe they are reporting earnings though tomorrow. So I did tell my subscribers that you really want to wait and see what's going to happen on this chart, because going into earnings, it's a crapshoot. You just don't know. So let's look at our next one, which is another home builder. And I really like the looks of this chart. It had all of these pieces that I really want to see on a chart that I'm going to invest in. And there's our 5-minute chart there. So looking at the daily chart, why did I pick it? It came out on my scans. I had a RSI that just moved positive. I have a really nice double bottom here, Eve Adam double bottom. And the expectation, of course, is a move here to get to that confirmation line and then exceed that by the height of the pattern. So the minimum upside target, if this price can get over 170, the minimum upside target is about 190 for LGIH. We have a PMO buy signal that is just now coming back in. You can see that 5-day EMA is about to cross above the 20-day EMA. That's a short-term trend model buy signal for decision point. You can see that as far as the OBV goes, you have these rising bottoms and they're rising more sharply than the price bottoms. So I consider that a positive divergence there. You have a stock chart's technical rank in that hot zone. And then look at the relative strength analysis. You have the group is starting to improve as we looked at on the other chart. And you can see that LGIH is also showing improvement here as far as its move against the S&P. And then if you want to get a winner, you want to find one that's relatively strong against its industry group. And sure enough, that's what we're seeing here with LGIH. It tends to be one of the leaders within its group. So that was another good one. We're at 453, so I'll just show you this other one. And there we go. Put that over here. And then I'm just going to show you a few things about our website. I do have a lot of free material, so stay tuned for that. All right, so Pfizer was one that I liked. You have an ascending triangle. That is a bullish formation. I love that I don't have to set a very deep stop here. It's only 6.5%. PMO's given us the crossover buy. RSI is positive. It's a little on the overbought side, but I'm okay with that. This is a pretty strong move and breakout to the upside. The scooter is rising very nicely. You can see that the OBV bottoms are rising very nicely. So you're getting confirmation there. And then again, that relative strength is so important. And you can see that the industry group over the last month has started to improve against the S&P. Pfizer itself has been doing well against the S&P. And again, it's showing leadership within its industry group. These are really simple concepts, but I think that they are just critical to your trading. And it's really just, it's not complicated. So buy point came in on Pfizer right about here on the big bar that we had. Everything continued pretty well. The PMO flattened out, and then we got another buy point here on a crossover, positive RSI. So overall, the position is up for the day, for the last trading day. This works fairly well for day traders as well, so I hear. So that's what we're going to be looking for. Now on Pfizer, you can see that PMO is above the signal line, but it looks like it's trying to tip over. And we did get a lot of selling volume at the end of the day here. So again, it's one that you'll want to watch, that 5-minute chart when you wake up, you put it on, you wait for these crossovers, and that's going to get you a really great entry. And again, just it's not that complicated. All right, so freebie. I do a live trading room on Mondays for free. It's easy to do. I love it. I get in there. We look at stocks. I look at the market. I look at the stocks that you request, and I look at them in a trading perspective, exactly as I just did. You can get that for free. So you can get kind of up on how I analyze and how you can time your own entries and exits. So that is available to you free every Monday from noon to 1. Spend your lunch hour with me. Very easy to sign up for that. You can just go to our website, and I'll show you that momentarily, but I want to make sure I get my freebie in here as well. If you want to try out my decisionpoint.com reports, I will give you a free 2-week trial to see what you might like about it. So you subscribe to our bundle, which is both our Decision Point Alert and our Decision Point Diamonds package. And you use the coupon code DP Trial 2, and you will get 2 weeks for free. After that, you will be charged, but I handle all the customer service. We're a very small company, my dad and I pretty much. So if there is any concern about the billing, like you didn't cancel it on time, you had planned to, whatever, I will handle that and make sure that you are reimbursed. But try us out for 2 weeks, see what you think. And I think that you will really like it. So let me show you my webpage really quickly here. We also have free material on decisionpoint.com. So here is our homepage. This is where you can click to learn more about us. If you click right here on register now, that's how you can get into that free trading room on Mondays. It's recurring, so you only have to register once and you'll get notifications right beforehand. Also, subscribing to our free newsletter is certainly another way to get into that free trading room, but also to get my weekly newsletter where I do talk to you and summarize the climax activity we've seen for the week, etc. And if you go to the blogs and links page, we do have free material over here. You can see our Decision Point show. I've done a ton of workshops that you can check out on YouTube that are free. I have educational material here that is free. This is where those chart lists come in that are for our subscribers only, as well as the archives. They go back to 2019. So you have plenty of time to check us out and see if what we do makes sense to you. I haven't printed my Decision Point Alert for the day, but I will give you a hint. We did have an upside exhaustion climax today. So I am looking for price to either churn sideways tomorrow, or we might get that decline. This might have turned out to be that dead cat bounce that everybody is talking about. So that's just between you and me and my subscribers that we do have that exhaustion climax coming up. But highly recommend you check us out. Like I said, we do also post free the Decision Point show. We have free articles that are in here available to you. But of course, we would love for you to subscribe to us, and we're very inexpensive. Most of my members say they make up the annual amount in just 1 or 2 of the good trades that I give them. So it's only $68 a month for both of them. I would love to see you in my trading room, and that pretty much does it for me. And again, I'll put this code up here for you if you want to try that 2-week trial out. And I am out, and I guess this conference is pretty much done.